Okay, so let's start our next assignment problem, which is E226A. So if you have your textbook, you can open your book. It's page number 89. If you don't have it, you will check our Blackboard site. You will find all those scanned copies of the assignments are here. So if you go here, content, assignment and solution. If you download this file, chapter 2, you will see all of those assignment pages from your textbook are scanned here, and I already posted those on Blackboard side. So now I'll solve problem number E226A. So let's read the problem first. So for this problem, E226A, you need to calculate cost of goods manufactured and cost of goods sold. If you remember from our last session, we actually discussed all these schedules where you will know how you can calculate all these items. So first you need to calculate cost of goods manufactured. That means we're gonna focus on this box where you need to know all this information. But if you see that to calculate cost of goods manufactured, you actually need to know this direct material used. To know the direct material used, you need to prepare another chart, which is our direct material used calculation chart. So you will have all those information here. So we will try to collect all those information and we will construct the chart. So let's try to do problem number E226A. So first we will calculate direct material used. Calculation of direct material used. And that's kind of our headline, so I can highlight this one, and you know what's the chart you need to focus on. So for direct material calculation, you need to start with your beginning raw materials inventory. Then you have to add the raw materials that you purchased. If you have any information about freighting, you need to add that, and you will call it material available for use. And then you need to subtract your ending raw materials. This is how you will get your direct materials used. So now if you take a look at this problem, you will see all this information are here. So you will see what is your beginning of the year. That means this column is your beginning balance. So you know this is your raw material beginning balance inventory. You will know how much raw material you purchase of direct materials. And I don't see any freighting. If you don't have any freighting, you don't need to worry about that. And then we need to subtract our raw material inventories ending balance. So you see this column end of this year, that's the ending balance. So let's try to calculate this one. First, we will start beginning raw materials inventory. You can call it raw material or direct material, whatever you want. And if you check the amount, you will see that it's $23,000. And then we need to add raw material purchased. So purchases of raw materials, if you check here, purchase of direct material, which is $74,000. So by following this chart, I will add raw material purchased. So purchases of raw material, which is I just mentioned it here, $74,000. So I'm going to add it. And these two together, we will call materials available for sale. Sorry, we will call material available for use. And that's, if you add these two together, you will find it's 97,000. Now, the last step, you need to subtract your ending raw material inventory. So we will check what is our ending raw materials inventory. And that is, if you check here, your ending balance raw material inventory is $25,000, end of the year balance. So I'm going to subtract this $25,000, and this is how you will get your direct material use. And if you subtract this 25,000 from 97,000, you will get $72,000. So this is our direct material use. And now we will do the next part, where we will calculate the cost of goods manufactured. So that means we will try to follow this schedule. We need to start with beginning work in process inventory. Then we need to add direct materials used. That's what we just calculated. You need to add direct labor. You need to add direct manufacturing overhead cost. And then you need to subtract your ending work in process inventory. This is how you will get your cost of goods manufactured. So again, if you take a look here at this problem, so you will find work in process inventory beginning balance, ending balance. We just calculated direct materials used from our previous schedule. You will find your direct labor cost, and then we need to calculate manufacturing overhead. So you may not find any cost item that is directly called manufacturing overhead, but you remember last class we actually discussed manufacturing overhead means all sorts of indirect labor or any other type of cost that are related to your manufacturing process or factory. For example, we have indirect labor, that's one part of your manufacturing overhead. And then you need to pay insurance on your plant. And this is how you will find another item of your manufacturing overhead, because this insurance is directly related to your manufacturing process. It is related to your plant. And then you have another item which is depreciation, plant, building, and equipment. So this depreciation expense is related to your plant. That means it is related to your manufacturing process. So that will be another item for your manufacturing overhead. Anything related to your plant. For example, you will see repairs and maintenance. These are also related to your plant, manufacturing plant. So that will be another item for your manufacturing overhead. Now you will see two other items, this marketing expense, general and administrative expenses. These are actually related to your sales. These are not related to your manufacturing process. So we will not consider these items here. But other than that, all other indirect labor or indirect materials, and especially if you have any other cost that relates to your plant, we will consider all those as our manufacturing overhead cost. So now let's try to do our next schedule. So calculation of cost of goods manufactured. and that will be the title of our schedule, so we can highlight it. Now again, we follow that chart. You already have that chart. We will start with our beginning working process inventory. We will add these three costs. Whenever I'll ask you to calculate your manufacturing cost, remember that means you need to add all these three costs: direct material cost, direct labor cost, and manufacturing overhead cost. So I will start with beginning working process inventory. Beginning, I'm just writing WIP, which stands for work in process, and then inventory. And if you take a look here, you will see your beginning working process. This is your work in process inventory, and the beginning of the year, the balance is $35,000. So I'll write it here. Our beginning working process inventory is $35,000. And then we will add all three manufacturing costs. One is direct labor cost, one is direct material cost, another is manufacturing overhead cost. So first, we need to add our direct material cost. That means the amount of material that you have used, what's the cost of that material? That means we need to go back to our previous schedule, and you will find here, this is your direct material used. So whatever raw material you have used, the total cost is $72,000. So we will just write the amount from our previous schedule, which is $72,000. Now we will add our second item, which is direct labor. And direct labor, we need to take a look at the problem. You will see here direct labor is given here $86,000. So I am writing here $86,000 directly from the problem. It's already given. Now the third item is manufacturing overhead cost. But manufacturing overhead, as I just mentioned, you will not find the exact amount of your total manufacturing overhead, but you know what should be the manufacturing overhead cost related item. For example, indirect labor or any other cost that relates to your plant or production process. So we will try to take all these costs. For example, you have indirect labor. So I'm just trying to do another sub column here. Indirect labor, which is, you see from this table, $42,000. Another overhead cost is insurance on plant. Just to save some space, I'm not writing all the detail titled, but here, if you take a look at this table, your insurance on plant is $11,500. So we will add this one, $11,500, and then the next item is depreciation, that is related to your plants, building, and equipment. So the next item is depreciation, and depreciation amount, plant and building equipment. Plant building equipment is $13,400. And we have another plant related expense, which is repair and maintenance. This $3,700. So we also need to add it, repair and maintenance. Okay, I'll just write it down, repair and M, because just to save some space, and that is 3,700. Now, if you add all these costs, you will find your total manufacturing overhead cost. manufacturing overhead costs. And if you have your calculator, add all these four items: 42,000, 11,500, 13,400, 3,700, and you will get 70,600. That means we started with our beginning work in process inventory. We added all three types of cost: direct material used cost, direct labor cost, and we just added manufacturing overhead cost. Now, if you add all these three costs to your beginning work in process inventory, we will call it total manufacturing costs to account for. Total manufacturing costs to account for. And if you take a look here, total manufacturing cost to account for is all these four items, and I found $263,600. Now, what we will do, we started with beginning working process. We added all these three costs. The last item, you need to subtract your ending working process inventory. So let's subtract ending. I will write WIP, that means work in process inventory. And if you go back to your problem, you will see here, this is your work in process inventory, and this is at the end of the year, which is $31,000. So we will subtract that ending work in process inventory, and which is $31,000. And this is how you will find out your cost of goods manufactured. So let's try to subtract this 31,000 from 263,600. And what I got, it's 232,600. So I'm just making it bold because that's another part. We just did it. So you see, we just first did our first schedule. We calculated direct materials used. Then we calculated our cost of goods manufactured. And then we will do our cost of goods sold. So for E226A, we need to do another chart, what we will call cost of goods sold. Now let's go back to our cheat sheet, and you will see how we have to calculate cost of goods sold. So the process is same. We will start with our beginning balance of inventory, but this time it is our finished good inventory. So we will start with, there is a typo actually, there should not be any plus sign. So we will start with our beginning finished goods inventory. Then we will add cost of goods manufactured. This cost of goods manufactured, you will get it from your previous schedule. That's what we just did. So you will get your cost of goods manufactured cost from your previous schedule. So we will add it here, and these two together, we will call it cost of goods available for sale. And then we will subtract our ending finished goods inventory. This is how you will find your cost of goods sold. Now, if you look at this problem, you will see here your finished goods inventory. This line is telling you what is your beginning amount and what is your ending amount. And this is our finished goods inventory. So let's try to do this chart, cost of goods sold calculation. Cost of goods sold calculation. So again, that's a heading, so I'm trying to highlight it. And now we will follow the chart. So we will start with our beginning finished goods inventory. We will add cost of goods manufactured. Then we will subtract our ending finished goods inventory. So let's do it. Beginning finished goods inventory. So how much is your finished goods inventory beginning balance? It's 20,000. So we will write here 20,000. And then by following our chart, we will add our cost of goods manufactured. Cost of goods manufactured. And this one you will get from your previous schedule. So this previous chart, we did it. The entire thing is to calculate your cost of goods manufactured. And our cost of goods manufactured is 232,600, which is from our previous chart. So I'm going to add it to 32,600, and these two together we will call it cost of goods available for sale. And this is how you will get your cost of goods available for sale, which is 252,600. And now we will subtract our ending finished goods inventory. And if you look here, ending finished good inventory is 22,000. This is finished goods inventory. This is your ending amount. So I'm subtracting $22,000. And this is how you will get your cost of goods sold. Which is, I found 230,600. So that's our entire problem. Problem number E226A, where you need to calculate cost of goods manufactured and cost of goods sold. But before that, you need to calculate your direct materials used. So this is our first practice problem. Now what I'll do, I'll post this one here on your blackboard so that you can check it later. And definitely we'll have one homework problem which is exactly like this problem.